Okay, it's Friday the 29th of July. I'm going to start doing something new on the YouTube channel. Basically, I get asked a lot about technical analysis, so what I'm going to start doing is once every week to 2 weeks, I'm going to take a Forex pair, I'm going to break down what has been happening in price action of late. I'm going to show you how I read it, and then more than that, I'm also going to identify potential areas to watch moving forward if you are trading on these higher time frames. So perhaps you trade the 4 hour or the daily. So the first pair I want to start with is GBPUSD. The reason I want to start with this one is because, of course, recently we have had Brexit. After the Brexit vote, well, first of all, we can see it right here. You can see the very, very strong down day. After this happened, in the news, and lots of politicians basically came out, and it was basically Armageddon. The world was ending. Brexit caused the British pound to collapse, and you know, from the way they were talking, everything was healthy and hunky-dory before the Brexit vote. So the reason I want to go over this pair is, first of all, to show you that the British pound has, first of all, been in a downtrend, has been showing huge amounts of weakness, and although the sell directly after Brexit was very strong, this was to be expected. Any sensible trader would be looking to have got short into this market, and the only difference would have been, instead of this taking 1 day, it would have taken, you know, a few days, a few weeks to happen. So the first way to read market sentiment is to do it the way that large institutions, things like hedge funds, banks, one of the main ways they do it is the MA200, simple moving average, 200 periods. Quite simply, if the market is underneath this moving average, it's said to be in a downtrend. If it's above it, let's have a look, like here, it's said to be in an uptrend. Very, very simple and very easy, quick way to judge a market. Here you can see it's bouncing up above and below. That is a ranging market. So let's have a look at this Great British Pound US dollar. Way back 2014, August 2014, the market is downtrending very strongly. When a market is downtrending, one of the things you will notice is you're making very, very specific types of moves. So you've made a low, a high, a lower low, and then a lower high, like this. This is said to be a downtrend. Now the interesting thing is, when this is happening, what you're very commonly going to see is when you make the new low and the lower high will very often push up, retest the previous low's levels before it sells off once again. Down we go here. You can see the low's down here. Then we push up once again. Right here. The market pushes all the way down, making a new low, pushes all the way back up again, another lower high, and right here. So the market is downtrending, we come across, we chop sideways, and then once again we come back into a downtrend. So this is the 5th of November 2015. The market had a slight period of moving sideways, and then it got back into a downtrend. What we can actually see is right here, the market comes down, pushes up, comes down, pushes up, comes down, and then pushes up again. This is a head and shoulders pattern, very, very common pattern that you see when a market is about to reverse its trend. So you'll tend to see them at the bottom of a downtrend, like this, where an uptrend or a very strong up move is going to start. If it was reversed, so if the head was up here with two shoulders, it would be at the top of an uptrend, and you'd likely see a very strong move down. Now, the key thing with this head and shoulders pattern is the market pushes up and fails miserably at the MA200. This is a sign of major weakness. We've just had a very strong pattern, a very clear pattern. And you fail at the MA200, you come down, push up, you fail once again, and the market comes down. Now, leading up to the referendum, this right here, this very, very strong move up, this was all on the back of people, I'm going to say gambling. You know, they're reading the polls, they're watching the news, they're certain that Britain's going to stay in the EU. They're throwing money into this market blindly, really, really stupid way to trade. You know, you're trading long into a market which has been in a huge downtrend for, really, you can say, since 2014. The result comes out, and the market plummets. Now, if we take the news out of this market, we completely ignore Brexit, you would have to be absolutely crazy to be long this market, especially this run up right here. Yeah, you'd be trading it right back into the MA200. You're trading it right back into the area that's just failed twice after completing a head and shoulders pattern. This market was already negative. This market was a short every day of the week. You know, you should not have been long this market anyway. So, what is that telling us? Well, it's telling us, first of all, that the weakness and the sell that we have seen was to be expected. It happened very quickly here because it was on the back of news, and you can say this entire section right here, after this run up, all of these traders are going to be scrambling to exit the market, drops it all the way back down, and then of course there's going to be short sells into this market. But if you take out the initial run up right here, this was actually the sell off, and actually the market rebounded all the way back up to there before the close of the day. So the sell off overall 360 odd points. Yeah, it's not overly dramatic, it's not crazy, it's not Armageddon. Now, what I also want to show you quickly is a pattern on this market which would have given you a clear indication that we were looking at the potential for some strong downside. First of all, let's look at major support and resistance levels. Right here. Right here. So continuing it over, right here. Yeah, you can see had huge reactions here, fallen away, huge reaction here, bounced. We're coming up, bouncing off of these levels over and over again. So what does that tell you? It tells you it's a very strong support and resistance area. Right here. What's the market doing? The market is, let me just get this right. It's making, let me just complete this. It's touching, higher low. It's coming down, it's touching, higher lows. It's pushing up. The key thing is, as it's pushing up, it's rejecting off of the major resistance area. So what are we doing? What can we see happening here? Let me just turn this into one line so you can see it easier. Just take it from here all the way up like this. We're making an ascending triangle. Ascending triangles is basically prices squeezing, and you're looking for a break to the downside. Yeah, it's basically the market testing the resistance area, refusing to test the resistance area, but price is making higher lows. So you're basically seeing the market trying again and again and again to break this level. Eventually, the bulls give up. The market breaks out. As soon as the market breaks out, you tend to get a retest. After the retest of the ascending, what is now resistance line, you get the sell. Yeah, the pattern was there, fairly glaringly obvious on the back of everything else I've already taken you through, on the back of being under the MA200, on the back of the failed head and shoulders pattern. This market was already negative. Okay, so now moving forward, sensible areas to be looking at this market. Well, the reason I've chosen this market, first of all, is because I wanted to go over Brexit and dispel all the rumours that, you know, the Leave vote has absolutely destroyed the pound. Yeah, the pound's been weak for quite some time. The sell was expected. So where are the very strong areas to look for trades moving forward? In here. And in here. If I was trading this pair, we're in a downtrend. You're looking for the major reaction areas. You can see it right here. This could actually, let me just zoom in a little bit. This could do with coming up. Right here. Okay, so you're in a downtrend in this market. The reason these are good areas to look for trades, we've had multiple reactions, multiple very strong reactions off of these levels in the past. We've just went over how during a downtrend like this, what you tend to see is the market pulling back. We're selling off. It's pulling back into these levels right here. That's what we have just went over earlier. So we've just came down here. Where's a good level to look for it pulling back into? One of these levels. With your good trading plan, good price action, these would be areas I would be watching to jump back into this market on the short side. To go long in this market, really, I would not be interested in going long in this market until we got sort of down to these levels all the way down here. Yeah, there's definitely more downside in this market. For me, with current price action, I'd be looking to get short. And those are the reasons why. Okay, guys, hopefully that was helpful. As I've mentioned, I'm going to pick, you know, a currency pair sort of maybe every week, maybe every 2 weeks. I'll see how it goes. I'll take you through the analysis of the market, show you how to look at the market, what it's telling you, and then I'll also pinpoint potential zones moving forward to consider for trades. Okay, I'm James Orr, guys, and thank you.